A quarter of developing countries are poorer today than they were before the COVID pandemic. This is as per the World Bank. Many low-income nations, particularly in the sub-Saharan Africa, have suffered a prolonged economic shock over the 6 years to the end of last year. Countries such as Botswana, Namibia, Chad, Mozambique and the Central African Republic have all seen average incomes fall, while larger economies like South Africa and Nigeria have failed to raise per capita incomes despite modest growth last year. The bank says recent growth has not been strong enough to reverse earlier losses. The World Bank says global economic growth has downshifted since the pandemic and is now too weak to reduce extreme poverty or create enough jobs. Global growth is projected to ease from 2.7% this year to 2.6% in 2026. Growth in emerging and developing economies is also expected to slow from 4.2% last year to around 4% next year. While the American economy has proven more resilient, with growth upgraded to just over 2%, the euro area remains a laggard, expanding at around 1%. Now, the bank warns that wars, famines and policy failures have all delayed recovery in many fragile states. Chief economist Indermit Gill says that avoidable policy mistakes, rising debt and weak investment are holding growth back. China, meanwhile, is expected to grow just above 4% over the next 2 years, which is its slowest pace in the last 33 years, weighed down by trade pressures, an aging population and a property slowdown. The World Bank cautions that without reforms to boost private investment, trade and productivity, the global economy risks slower growth, higher debt and rising joblessness in the years ahead.